Traders, in front of us we have 2000 tick chart for the S&P 500 mini futures, and as a price action trader my goal is to identify places on the chart where price will create a significant move and I can capitalize on this move. In order for me to predict these moves, I need to have a strategy that will help me to identify these spots on the chart. In hindsight, I can see that the structure was a bullish uptrend, but how do I identify the proper places to enter when I'm watching this real time? This is a pure naked price action chart in front of us. What I'm going to do, I'm going to make my job a little bit easier and I'm going to plot the 21 bar exponential moving average. The 21 bar exponential moving average is a supportive indicator only. It tells me the bias and it serves as a key entry point, which means when prices will pull back to the key entry point, this 21 bar exponential moving average, I can expect under proper conditions for price to bounce off the exponential moving average. Now that's not the only thing that I need to pay attention to. As part of the strategy, my goal is to take advantage of price action rules and wait for high probability setups under right conditions at key entry points. If you guys don't know what the price action rules are, I made a video about 5 price action rules that you need to know. You can go and check the video to make it a little bit more easier to understand. Now, what is a high probability setup? High probability setup, it sounds simple, but it's a two-legged pullback because market likes to move in pairs of twos. Two-legged pullback at the key entry point, at the trend line, support resistance line, or the 21 bar exponential moving average. And once price creates two-legged pullback, I expect continuation of the trend. As a price action trader, when I'm trading a naked chart, my goal is first to identify the pre-market structure before I start trading. And I can take advantage of the information that was provided to me from the pre-market structure. The first thing I can see is that yesterday's session ended very bullish. You guys can see EMA pointing up and prices were creating series of higher highs, higher lows. And that price action was transferred into today's session as well. EMA keeps holding prices and we still keep pushing higher consistently. So right now I have a bullish bias right from the get-go. What I'm going to do, because I want to follow the trendline rule, I'm going to draw my shortened channels in price action. You guys can see we have a shortened uptrend, break, new extreme. So I now need to draw a shortened downtrend like this, and we have an overshoot for this channel. Now you guys can see this is the overshoot. This is unnatural activity in the market. Why am I not making the trend line wider? Because I'm bullish bias, and also it fits nicely at the very beginning, and these are 3 big bearish bars, very steep move, and when the move is very steep, I tend to trust this as an overshoot. So I'm not extending the channel, I'm treating this as a channel with the overshoot, and overshoot leads to break of a trend line or possibly straight up reversal. So this overshoot is giving me more confidence to my overall bullish analysis, and as price is creating break of a trend line and is pushing higher, this is confirming that this is a bullish structure. So I'm going to draw a shortened channel because I want to follow the trendline rule, and right now I expect to get a two-legged pullback at the key entry point. Now a high probability setup can also be a failed two-legged pullback that goes against the trend. Second entry short in a bullish trend under right conditions at the key entry point can be considered as a failure, and I can treat it as a high probability setup. Now we have a new low right here. I reset the count here because price created first entry short, second entry short. So I reset the count after significant event in the market, and we have first entry short, second entry short again. Remember, in bullish structure, so I treat it most likely as a failure if it makes its way to the key entry point. Now we have a small little trigger right here, but when I was watching this live, there was no tick lower. So I'm going to make this lesson as the prices were printing live. Otherwise, the second entry short failure would be right here. Now notice what we have. Price is making its way all the way to the key entry point, but at this point on, prices are a little bit stacked and it's not touching the EMA completely. The body is very far from the EMA. But once we get a trigger above this bar right here, this is the first bar after second entry short trigger that we triggered above, and this can serve as a failed second entry short. So according to price action rules, this entry is decent, but it feels a little bit stacked and not perfect at the key entry point, so it's a little bit advanced. But notice as price action is pushing higher, I have to make the judgment. I'm going to zoom out and I'm going to judge the structure, and right now we keep pushing higher. So what I'm going to do, I'm going to identify a larger channel because right now this is looking like a stronger bullish structure than it did initially. What I'm also going to do, since prices keep creating multiple legs to new extremes, if I have a trend line that keeps creating multiple new extremes, that means there's probably a wider channel. So I'm even going to extend the channel like this, and prices are right now working higher. But remember, I'm following the price action rules. So what is my main focus? where is the high probability setup going to appear at the key entry point, and what is the high probability setup? A second entry long. It's that simple. The trend is bullish and I only want to take entries on a high probability setup. I'm not interested in chasing the market all the way up here far away from key entry point. So this is the highest high where I'm going to reset the count, and as I'm watching the market, I can see that the price is created first entry long, pull back lower, and we have second entry long forming where at the exponential moving average. Also, I see a micro double bottom and I have a strong bullish uptrend, and this shortened uptrend needs to get new extreme according to trendline rule. So this is a two-legged pullback, first leg down, second leg down. It's simple, but it works, and this is the only setup I'm interested in. And this is a high probability setup. This was my first trade for the day. It let me sweat a little bit because it took a long time before it eventually pushed higher. But if you don't monkey with the stop, your stop loss goes one tick below the signal bar and you cannot move the stop. You do your analysis prior, and after you enter, you cannot scratch the trade. You cannot move your target profit. You cannot move your stop loss. The only way you can scratch the trade at break even is if the market goes into long congestion, and in that case the market can probably break out in either direction. After scalping out, I was just trailing the runner below each swing because I want to stay in the market in case market rallies to the upside. So portion of my position I was just trailing to the upside. Scalp is the main portion and runner is just a gravy, just a bonus in case market keeps going higher, and market was truly working higher. So after two-legged pullback, high probability setup at the key entry point, is my strategy changing? Do I approach market differently? No, I approach it in the exact same way, and I expect for market to do the exact same thing. So after prices are pushing higher, and I always reset the count at the new high. We have a, for example, new high, first entry long, second entry long, but this second entry long is not at the key entry point, not at the EMA, so I cannot take it. Prices keep pushing higher, new extreme form. This is why I reset the count, and we have a new high, first entry long, second entry long, and we have shortened downtrend that played out. And once again, this is a two-legged pullback, second entry long, great bullish signal bar at the exponential moving average with the direction of overall trend. This is a simple high probability price action setup. It was good enough for a scalp. Market formed a double top, pushed lower. Now we have a new high, and I reset the count again, and we have a first entry long. Notice what we have, still closing above exponential moving average, confirming the trend is still in play, and we now have a triple bottom, triple test. So this is telling me that this bottom is still holding, but I cannot take this entry. Why? Because it's just a first entry. This is just a first leg. So that means there is a high likelihood that the second leg is going to follow, and prices may create a two-legged pullback at the key entry point again. And remember, when you are in a strong trend, with trend pullbacks are designed to look weak. Counter trend entries are designed to look strong. So it constantly tempts you to pick a top and not enter on a pullback with the direction of overall trend. Remember, you never want to enter while the market is pushing higher like this. You always want to enter in its exhaustion phase, in its pullback at the key entry point. So right now we have a new high. We have a first entry long, pullback, second entry long. Again, two key entry points are holding, and this is another high probability setup using a simple price action rule. What can be a little bit worrisome is that you're close to this resistance, but if I'm going to zoom out and I'm going to judge the structure, how strong and clean uptrend it is, there's a really strong likelihood that the triple bottom will hold, EMA will hold, and if it's a two-legged pullback with such a nice signal bar, that you can take this as a slightly aggressive entry. Now market keeps pushing higher and uptrend is still in play. Remember, I'm following the trend line rule. So as long as this uptrend is without a break, meaning close outside, this uptrend is still in play, and my job is to focus on exponential moving average and on a high probability setup. Notice what we have. We have a first entry long, but I'm not interested. It's just a first entry long. Also, we have a multiple bottoms right here, so I can reset the count all the way down here. First entry short, pullback, second entry short, failure. This entry is a larger filled second entry short. It looks like this, larger visual two-legged pullback. First leg, second leg down, filled second entry short. At this point, we entered a EMA hard mode, which means every single touch to the exponential moving average will result into a bounce. So you can consider this entry as a decent entry. It's a little bit aggressive. Once the market is this strong and this is a clear uptrend, you can pretty much make a case for going long here. But once again, you're not focusing on different entries. You just want to take second entry longs at the key entry points or failed second entry short that goes against the trend. Now, as the market keeps pushing higher and I see structure like this, and this is the new high where I reset the count, we have a first entry long, and that means there's a possibility for me to get a second entry long, the same pattern. It sounds too simple, it looks too simple, but this is how price action likes to move in pairs of twos. Prices are breaking lower and we have first entry long, second entry long. At the EMA, at the time, I even drew a little bit channel. What was my channel? Something like this, potential spike and a channel that I had. So smaller channel, it was very close to getting confirmed. Another second entry long at the key entry point again. Signal bar is bullish, structure is bullish trend, and you can see that it resulted into a winning trade. And today was one of those days when it was like taking a candy from a baby. But once you get a day like this, you need to make sure you take advantage of this day, and you only need a couple of these days during a month. If you get 2 days like this in a month, and you can catch few decent runners, because it is not impossible to catch 2 good runners on a day like this. I caught one very good runner today. A simple 2-leg pullback at the key entry point in this bullish trend is all you need. So the day like this is the day that we long for. Rules are still the same. I'm not picking top. I'm not even thinking about selling. Structure is bullish. I keep resetting the counts at the highs. Right now we have micro double top, so I'm going to reset the count, and we have a first entry long. I'm not interested. This is just a first entry long. We have a second entry long below EMA gap bar. Decent entry, but a little bit more advanced. When I'm watching this, I expect still for price to push above exponential moving average, but it is not happening. Prices keep pushing lower consistently. Okay, so right now I expect for prices to make its way all the way to my key entry point. I'm going to draw the trend line. We have a new low form. First entry short, pullback, second entry short, failure. But we closed below exponential moving average. When I was watching this, had we closed above, I would have liked entering here, but second entry short formed below and even failed second entry short didn't manage to push above EMA to confirm the bullish momentum. This is big. We still need to push above EMA because this downtrend is new low. So if I'm going to be gambling and taking a long here, I need to see it push above EMA. It never pushed above EMA. In fact, it created a nice juicy double trap, and this entry is very tempting because this downtrend needs to get new low. So you're following the trend line rule not only for the big patterns but for the corrections as well. And this was really tempting trade. I can almost mark it, but I'm not going to because it is against the overall trend. But once you see traders getting trapped like this, such a great bearish reversal bar, and this downtrend is new low, you can figure the market is probably going to keep pushing lower, at least to the key entry point. Now notice what price did. We have a break, 2 legs to the new extreme, and what do I expect now? I observe how EMA is going to react, and this uptrend right now needs to get new extreme because I'm following the trend line rule. So I expect to get a failed second entry short above EMA, and I don't get it. Markets just keep pushing lower and keep pushing lower consistently. So that means I have to adjust, and this downtrend is probably not the one because we have 5 legs to new extreme. So what I did, I extended the channel like this because I get multiple confirmation now of the highs and even of the lows. Uptrend is new extreme, yes, that's the bigger pattern, but big patterns, corrections may take time. So I need to let this downtrend play out first. Unfortunately, I don't even get a good second entry short. If I had a decent second entry short at the 2 key entry points, because EMA and trendline are running together, I would have considered it, but we never got it. And notice what we have, small little break, move to a new extreme, and prices are right now pushing above exponential moving average. This is what it looks like zoomed out, and I expect for prices to create new extreme. Why? Not only because I'm following the trendline rule and the price action rules, but also because technical patterns repeat over and over again. This is May 23rd. Technical analysis patterns repeat over and over again. Price action rules are working. We have an uptrend working higher. We have a first break for the uptrend, and what do I expect? I expect to get a new high. Downtrend played out with a break, new extreme, and after prices pushed above EMA and EMA confirmed the bullish momentum, notice we eventually received a new extreme. Same structure, I expect for it to do the same thing. Uptrend from the June, strong uptrend, break, we expect to get a new high. First, I'm going to let the downtrend play out, break new low, and if prices push above EMA and give me a reversal pattern, I can enter long, expect for prices to create new extreme. Push above EMA confirming the bullish momentum, first entry short, failure, second entry short, failure. Do I get a trigger here? Unfortunately, I don't get a trigger above this failed second entry short. So when I was watching this, I'm expecting now to get a last hope and to get a second entry long. And notice what price created, new high, first entry long, pullback, second entry long. And once again, when I was watching this live, there was no double top. There was one tick lower, so there was a legit second entry long. And right now, I have a first entry long, second entry long. EMA keeps holding price. The bigger channel still needs to get new extreme. And this right here is a second entry long at the key entry point. And not only that, it is also continuation of the failed second entry short. But this second entry short failure could have been treated as an engulfing, and it is still in play and it didn't get stopped out. You keep your stop loss one tick below the signal bar, so you would have to ride this out. Not that this is a great entry, because you would be entering at the very highs and you don't want to take an entry like that, but it is still continuation of a failed second entry short and a second entry long at the key entry point. This was my second trade for the day, and unfortunately I didn't get runner because it came back instantly, stopped me out, and market eventually kept going higher. And notice what you have again: new high formed, first entry long, second entry long, first leg down, second leg down to two key entry points, but the signal bar is horrible. This is a nice bullish bar that I want to go long above. This signal bar is bad, so I cannot go long here and I need to be patient. Now we have a break of the spike and a channel, new extreme formed, so that means that right now we can get correction or possible reversal. And notice what we have: new high, first entry long, pullback, second entry long, another two-legged pullback. It was good enough for a scalp, but after breaking new high, I'm going to be a little bit hesitant. You guys can see you barely got out. Market reversed to the downside. Now I'm going to zoom out like this, and I can see that right now we are working in a sideways trading range. But we still traded up into this trading range, so we're most likely going to break higher, and the uptrend still needs to get new extreme. So I'm not really thinking about selling. Prices are pushing above EMA, so if anything, I'm looking for failed second entry short, new low, first entry short, second entry short failure. But it is way too big, way too congested. EMA in the middle of these bars, I cannot take it. You guys can see you still would have survived because you keep your stop loss one tick below the single bar, but that doesn't mean that this is a good entry. It was too congested, too big, and I need to sit on my hands, be patient. In the meantime, I still expect for prices to create eventually a new extreme for the major uptrend. Right now we're in the middle of this trading range, and you guys can see there are no high probability setups. Once prices are in the middle of the trading range, in the no man's land, I'm not interested because you can get chopped out, and I expect for prices to give me at least a second entry long before we reach new highs. But we already reached new high, so I can expect correction or possibly reversal. So I'm going to draw the shortened channel to the downside. First entry short, pullback, second entry short. I can mark this entry. It is off two key entry points. Uptrend played out with the break and new extreme. Expect correction or reversal. We push below EMA, which confirmed the bearish momentum, and we're coming from the range highs. Second entry short, two key entry points. Market continue pushing lower, and we are at the close. The two-legged pullback pattern seems too simple to be powerful, but if combined with proper market conditions, it can be a reliable high probability setup. I'm gonna see you next time.